India's economy showed resilience and emerged as one of the fastest-growing economies among major nations in 2022-23, despite several shocks such as the second wave of the Covid-19 pandemic, weakening consumption, subdued rural demand and sustained cost pressures. According to the RBI's annual report for 2022-23, India's real GDP growth was expected to be 7% in 2022. This was higher than most of its Asian peers and other emerging markets. The report also said that India's growth momentum was likely to be sustained in 2023-24 in an atmosphere of easing inflationary pressures. The RBI attributed this performance to several factors, such as the swift and effective policy response by the government and the central bank to mitigate the impact of the pandemic and support the recovery, the resilient domestic macroeconomic and financial conditions, which helped cushion the shocks from the global slowdown and geopolitical tensions, the expected dividends from past reforms and new growth opportunities from global geoeconomic shifts, which placed India in an advantageous position, the robust services exports, especially in the IT sector, which contributed to a moderate current account deficit (CAD) of 1.6% of GDP in 2022, the strong performance of the agriculture sector, which supported rural incomes and demand, the young and dynamic workforce, which provided a demographic dividend and a potential source of innovation, the Atmanirbhar Bharat policy, which aimed to promote self-reliance, competitiveness and efficiency in various sectors of the economy. However, the RBI also cautioned that there were risks to this growth outlook, such as the emergence of new variants of the COVID-19 virus, which could pose a threat to public health and economic activity, the higher global oil and commodity prices, which could increase input costs and inflationary pressures, the widening of the fiscal deficit and public debt, which could limit the fiscal space for further stimulus measures, the slow pace of vaccination and structural bottling CKs, which could hamper the recovery of some sectors such as tourism, hospitality and contact-intensive services. The RBI said that it was important to sustain structural reforms to improve India's growth potential amid slowing global growth and geopolitical tensions. It also said that monetary policy remained focused on withdrawing accommodation gradually to ensure inflation aligns with the target while supporting growth. It added that it was exploring the possibility of expanding the ongoing pilots in central bank digital currency, CBDC, at the retail and wholesale levels. India's economy bounced back from COVID-19 with a robust growth of 7% in 2022. This was despite facing several shocks and challenges from the global and domestic fronts. However, the recovery is not complete and there are some downside risks that could affect the growth prospects in the future. Let's look at some of these risks and how they could impact India's economy. One of the major risks is the slowing global growth. The world economy is struggling to recover from the pandemic and its aftermath. The ongoing geopolitical crisis has heightened the uncertainty and volatility in the global markets. The rising oil and gas prices have also added to the inflationary pressures and fiscal burdens for many countries. These factors could dampen the demand for India's exports and affect its external balance. They could also reduce the availability and increase the cost of external financing for India's investment needs. Another risk is the protracted geopolitical tensions. The world is witnessing a rise in conflicts and disputes among major powers and regions. These include the US-China trade war, the Iran nuclear deal, the Afghanistan situation, the Taiwan issue, and many others. These tensions could escalate into military confrontations or economic sanctions that could disrupt the global trade and supply chains. They could also create political instability and security threats in some regions that are important for India's strategic interests. A third risk is the possible upsurge in financial market volatility following new stress events in the global financial system. The global financial system is still vulnerable to shocks and contagions from various sources. These include the unwinding of the ultra-loose monetary policies by some central banks, the debt problems of some emerging economies, the cyber attacks on critical infrastructure, and the regulatory uncertainties around cryptocurrencies. These events could trigger panic selling and capital outflows from emerging markets like India. They could also expose the weaknesses and fragilities of India's financial sector and its regulatory framework. These are some of the downside risks that India's economy could face in the coming years. They could pose serious challenges for India's growth momentum and macroeconomic stability. Therefore, it is important for India to be prepared and vigilant to deal with these risks. India should also continue to pursue structural reforms and new growth opportunities that can enhance its resilience and competitiveness in the global arena.